Hello, traders. Boy, this carnage just continues in the overnight session. Started in Asia, and the futures so far in Europe, you're looking at 1.5%, 2% declines in the European session at the open this morning. So, and the futures in the U.S. markets are looking quite miserable as well. I'm going to start with the VIX, just to give you an overview here on how the VIX is setting up here. You know, we have we got different expirations on the different VIX contracts. And if you notice one thing that really stands out to me, that they're pretty much they're pricing in higher volatility all the way out 27 days out. So they're expecting this next month to have an extreme high level of volatility, just as high as volatility as we're currently having our current sessions. And we're getting 2% moves daily in these markets at this higher volatility. So 2% per day, the markets can drop pretty darn quick when moving that type of percentage moves per day. You can have 10% moves in a week just by normal volatility moves. So just keep that in mind that the VIX futures are pricing in major um, volatility in the markets for the next month. And if you, unless you're a very long term trader and you don't want to look at your thing look at your account size for a while, sometimes it's better to be in cash, and this is one of them situations until all this carnage is over with. Okay, I want to start with the Nikkei futures, and they sold off hard in the overnight session, extremely hard, and we closed at the lows of the day of the session, and it was the highest volume node of the session for the Nikkei, and it's breaking some critical support areas today on the Nikkei. It's likely starting. This is just the beginning of a longer downturn in your Nikkei, and then also in your it also was coupled up with the U.S. dollar, um, JPY, the Japanese yen. It started breaking down today. You go out on your weekly here. If I can get this to start, you can see what's happening here. We've had this wedge formation developing in the Japanese yen, and we have a breakdown confirmation out of the wedge as of today. And here, like back with that last massive sell off in the Nikkei, uh, the yen came down with it. That's not always the case. That's a situation I'm kind of looking at right here that we might be at the very early stages of to see the yen drift lower along with the Nikkei. So keep that in mind. The Nikkei is one area that has not uh, uh, came down with the rest of the global markets. It's just starting its breakdown. See, it's still right here at highs in the markets. And as of today, we're starting to break out of the range. And so it is quite important here to realize that um, we are right down here at the top of the yearly range. This is the range last year that was developed with volume. So we are abandoning all of the 2018 value as of the close today, and we should start seeing a continuation lower back to the 19,284 area is where true value at this point would be logically. So, yeah, the Nikkei is in a lot of trouble, and it is a major driving force for global economies. So just keep that in mind. As you can see, the sell-off has continued somewhat for the S&P, and so just keep this one in your mind here. It's S&P is not quite as bad as the Qs, so this is just something to keep on your radar uh, for tomorrow. If you look at your Qs, it's a different story. we are already our value support was right near the lows of the session, closing session yesterday, and we're right down there right now, threatening a breakdown of the support level, which in all likelihood is, in my opinion, definitely going to happen tomorrow. That we're going to see a major flush lower in the Qs, because typically when they raise the interest rates, the Qs really take it on the chin. The Nasdaq, because they're interest rate insensitive. So just keep that in mind. There's a lot of risk that the Qs are going to continue their slide lower in tomorrow's session. Okay, and then I also noticed that the mid caps, I don't have with Thinkorswim, I don't have the Russell itself, but the mid caps here, we are putting it. We were starting to put in lower lows. Looks like we're coming back a little bit on the mid caps. But yeah, they were started putting in lower lows in the overnight session too. And then you also have your crudes down $1.05 in the after hour session. So it's still kind of holding a little bit better than yesterday's yesterday's session. Yesterday's morning session we got down to 46. Oh, right around $46. And so we're holding up a little bit better, but still nothing to brag about. Okay. And the yield curve, it's went back inverted as of close. The 2-year has crossed back over to 5-year, and they're still, all of them are in a downward spiral. And we as in traders really need to be concerned about the high yield markets. HYG, after the news came out from Powell, and as I put in my last video, I told you guys, everybody, that he needed to stop the asset reduction plan off of the Fed balance sheet. And he never said one word about that. And if he was serious about stabilizing the economy, that would have been the one key thing that he could have done that had been under the radar, that nobody would have criticized him for doing. And he didn't do it. And that's where he really messed up. It wasn't about the interest rate hikes. I think he had to raise them. Otherwise, the banks or it was going to be just devastating for the banking sector. He had to raise the rates. But the balance sheet was a whole different story, and his reluctance to do that, it is definitely causing a liquidity squeeze in the high yields and the bond markets. The bonds are just going to high heaven here, and on the the corporate yields are really spiking. When this goes down, that means the corporate yields are spiking big time, and major liquidity issues for businesses to continue to do business financing. Businesses like Tesla that's going to have to keep borrowing money just to keep building out all these projects. And they just broke ground on a brand new gigawatt factory. Building out all this infrastructure for stuff for a technology that's not proven, that is a fad that may not be sustainable 5-10 years from now, and getting investors to come in there and buying up all giving them all this debt and high yields and stuff, and it can break a company. It's like a car company. And okay, I'm going to go to the FDN. This is the First Trust Internet ETF. It tracks the FANG names. Okay, and you see what's happening here? We have a head and shoulders pattern. We're coming crashing down, okay, to our, I think it's a 200 SMA if I remember right. And let me double check that real quick. Okay, we're crashing down to our 100 weekly SMA. And so the pattern is completed on our head and shoulders. This thing can start falling real quick now, real quick. And the two reasons I think so, the news that came out on Facebook, they're planning on prosecuting him for not protecting users' data, and they came out, prosecutors, yesterday, and that is some seriously bad news for Facebook. And then in the same thing, Netflix is, it's still up 40 some percent for the year. It has all kinds of room that it can come down. Here's Facebook right here. This is just a little bitty new blip it had yesterday. Yeah, blip. Yeah, you heard me right. This thing's going to be coming crashing down here. It's coming down the 115 area. I'm almost positive of that. Probably before the year's out. That's how pessimistic I am on Facebook. So that news yesterday, oh my lord, horrible. And then Netflix, uh, it's another head and shoulders pattern. You can draw the line however you want to do it. Coming into that 100 SMA. When the fangs start to break, it's going to go with them. And this, to me, is going to be one of the leaders to the downside when the markets do decide to resolve lower. And typically in the higher interest rate environments, the fangs have really been taking it on the chin. So just keep that in mind in the past Fed sessions that whenever they've come out and they're raising the rates, it's really been negative for your FANG names. Okay, and I'll give you a quick. I just think going into the first of the year, your best bet now is to be looking at stocks that have not sold off yet, have not caught up with the rest of the markets. You see this trading range right here. I would think you would see Boeing coming back down to the 260, 250, 260 level. That's a reasonable assumption. If we get a second leg lower here in the sell off, which it's really looking like we're going to. My favorites are Intel Corporation, head and shoulders pattern, ready for breakdown. If the techs sell off, Intel's going to go with it. Your measured move, that's going to put us right back down here to the 38 to $40 range for Intel Corporation. And then you have your Cisco. I think it's getting about ready. Look at this. This here is a quarterly trend line that I've got on here of critical support resistance on our quarter. And as of today, we're breaking down below quarterly resistance. Support. We broke below quarterly support. We broke below the 50-day moving average. Cisco's looking really bad here. It's really looking for a nice correction setting up on Cisco. McDonald's. Look at this parabolic chart. Barely pulled back at all here. Okay. And, this market starts coming down. That's your head. This is your shoulder. We can have a long-term pattern built out here for McDonald's. Okay. And I think Nike's one I was looking at too. Nike's already come in quite a bit. So it's not nearly as telling as the others that I mentioned. But yeah, those others there, man, they are just looking primed. And then, Microsoft. Look at this. Hasn't given anything up yet. So, it's not looking quite as ready as some of them. But of the other ones I've showed you there, Cisco looks like it's ready to implode here. And if SMH is any tell of what's about to happen here, it's breaking out of the box. It's resolving out of the box. Trading box. So when you see this situation, when you're breaking down below your box, you got a continuation pattern setting up here. And whenever your SMH and your IYT are both doing that, and your IYT is literally carnage in your transports, and it has come down to a possible support zone here. Let me just reiterate, a possible support zone. So we'll see what happens here, but it's not looking good because it looks like we're going to be 1 to 2% lower on the indices opening up in the morning. So we'll see what happens in the morning. See see if Europe catches a rebound. But it's there. Almost every indice in Europe is looking 1.5 to 2% lower in this early market when I'm doing this video. So looking really bad. And uh, if you're going to do anything, now's the time to probably start thinking about selling some option premium. The volatility is starting to get jacked high enough to start selling some premium at these as higher volatility environment. Okay, good trading and be safe.